Oh, all right, guys. I think we're gonna get started here. It looks like Donnie Boy, your mic is on, but I cannot hear what you're saying, and I don't know if that's just background noise. Um, okay. Well, I couldn't hear you, so I don't know what's going on. Sometimes my Discord, for whatever reason, my speakers work. Um, I have it set on Discord to go to my speakers, but then I don't hear any output from Discord, so I don't know what that's about. Anyway, good morning, everybody. Welcome to our pre-market analysis for the S&P 500 futures market. It is Thursday, January 6th, 2022. We are in our first week of the new year. And let's go ahead and just kind of get started here. We'll talk about yesterday because this is how the market looked when we came in, right? We came in, we were within the last 2 or 3 or 4 or 5 days of price action, right in the middle of it all. In fact, we were just in front right over there. And so basically what we said yesterday was we just had to wait and see what would happen. There were equal arguments on either side. We did have a lot of bearish kind of signals and clues up top for the bears. However, we said that the bulls just seemed to be pretty relentless. But pretty much we just had to wait and see. If we could hold up around 50% of the day before and actually get through that level and hold above, we were going to be buyers. However, if we held below that level and we got below one of our other lines in the sand, we were then going to become sellers. Especially, I said, if we break through the previous daily low, at that point, it's pretty much a big argument for the bears, especially from our 512 tick perspective, which we'll maybe see here at the end. So everything was looking pretty bearish, well, everything was looking indecisive, and then all morning it basically just chopped and chopped and chopped all over the place and really didn't go anywhere until the FOMC minutes came out at 11 a.m. Eastern. So pretty much all morning it chopped around, and then right around 11 a.m., let's see if we can get right into here. We got the pullback, so we broke the previous daily low. So we got our hint yesterday right here. We started breaking lower. In fact, just after we ended our morning session, we talked about we were pushing below our VWAP and our 200 on our 512 chart over here. And we could see, let's go back. Let's go back to yesterday. And we started where we ended our session here. And I said, if we start to break below VWAP, 200 breaks below that, that's another bearish clue. And then if we go ahead and break the previous daily low, it's all over. It's time to start selling the market. And sure enough, again, they broke below just before the FOMC meeting, minutes were released. And then as you can see here, right at the release, there was a little push. And look where they pushed up into. Let's bring it up here on the 10-minute once again. Look at where the market pushed up to. Right to the middle of the range there. So it came up, maybe faked some people out thinking the bulls were going to come right back in. And then, bam, sold the whole sucker off there. So that was yesterday. And that's what brings us into this morning. Now, when we pull back here, it's not too surprising where we found some support. We were just in front of the 50% retracement of the whole leg up. If we zoom all the way out and we go all the way back to December 19th lows, we throw a fib on this leg all the way up to the all-time high at 4,800 quarter, I believe was the number. 40.08 quarter. You can see 50% is right there at about 46.63, 64, 65 area, and the bounce was right there around 66, 67, or 68 even. So we got a nice healthy retrace. It doesn't mean it's all over for the bulls. I mean, we're still holding 50% of the previous leg, still somewhat of a bullish clue. However, this morning as we come into this market, it's very possible for them to continue to sell this off. So let's take a look at kind of all the time frames and just see if there's any clues that we can kind of pull out of the charts here this morning. So let's go up to the ultra high time frames and just kind of take a quick look. Now, if you're interested in a little bit more of an in-depth analysis of these higher time frames, you can just go back to my Monday pre-market where we spend more time on the high time frames. But we can just really quickly go through this. Our 3-month chart looks extremely strong, and there's actually no signs of exhaustion. But then as we dial down, we talked about the monthly, the weekly, and the daily. All three of these critical high time frames had a bearish argument from the highs and a bullish argument from the pullback where they bounced from just a few days ago. Remember, from that December or whatever 19th low. So we had a really strong bearish kind of pattern, but a decent bullish continuation pattern off the lows. So all we were doing up here was waiting to see who was going to win out, right? So pretty much an agreement up top for the bearish argument off the all-time high, and then a bullish argument from that pullback. And so that's what made it hard yesterday and for the last few days to determine who was going to win out here. Were all the bearish signals up top going to win out for a pullback, or were the bulls just going to continue to jump in and push it higher? That was the question, and then we got our answer at least in this interim period here last afternoon, or 11 a.m. yesterday. So let's take a look at what we're seeing today. On the pullback, we still have a bullish argument from the low. So back over here, going into kind of the end of the year into the first week, we had a nice bullish divergence on the daily. It did follow through to push to the new all-time high. Then we got the bearish signal, and then there's the failure. But on the pullback here, we do have a potential bullish argument from the low right now. Just keep in mind that the market could come all the way back to that December 19th low, and we technically could make the same argument. So that's not helping us out that much, but we do have the beginnings of a potential bullish divergence there. We also have it on the 4-hour. Same thing on the 4-hour. If it was to come down to this 23 area, which is the 61.8 retracement of the whole push up, I have to redraw this here, just about a 61.8 retracement of the whole push up, it could still pull all the way down there, and we probably will still have a similar argument. So again, not necessarily helping us pinpoint anything, but just from these higher time frames, we do see a potential build up now from this pullback of a bullish divergence. So that's going to be a line in the sand this morning. Right there, the low of the overnight session, which happens to be 46.68. If we can't break through that, then more than likely we might see some follow through from these higher time frame indications. And let's go down to the 60 and start talking about kind of all the different stuff we want to be looking for here. So on the pullback, again, that line you see, this blue line coming across, that is 50% of the whole push up from the December 19th low to the all-time high. So we are holding there. We do have a 60-minute bullish signal from that low as well. So pretty much this morning, what we're going to want to see here is if the market can hold the overnight low, then we're going to potentially push up, and we have some levels above us that we're going to want to pay attention to here. So pushing up, just keep in mind here, for anyone who does find the long this morning, first thing we're going to have to do, obviously, is get through the overnight high. So getting through that right around 0275, I guess that is, 03 even. Getting through 03 is going to be that first important thing for the bulls to do. If they can get through there, just beware that this level right here at 47.13 quarter is this, if we just zoom back a little bit, is this swing low back here that hasn't been tested. So we got some decent, we actually had a double bottom here and a push out. We broke through, and now as we advance back up, wouldn't be too surprising to see some type of reaction right there. And then if the bulls are strong and they continue to rip through, there's some other levels to keep in mind. This other area of rejection up where we have this blue line around 29 to 30, 31. And then 50%, and this is kind of interesting, 50% of this whole push down is sitting at 50% of the previous day, right? So that is then another critical level there to get through. And if the bulls do get through that, there's two other things I'm kind of looking at here. There is a 61.8 retracement at 55.25. There's a million times where the market comes up, it comes right to one of these retracement levels and it fails to the tick. That is a possibility. But what I'm looking at here is this major swing low right here at 47.47. Huge big wick down, huge bounce out of there, break below it, coming back up into that. Very important. We see this stuff happen over and over again, and that's why I mention it, is right there at 47.47, and then a little bit further past that 61.8. Like I said, very possible they could just come right into it and fail, especially because look at what we have over here at the 61.8. All of this kind of support in the market here. Now it's not clean. Sometimes it did break through, like right there and right there, but for the most part it has held in that general area there. So again, also possible because we have all this structure over here for trouble right around the 61.8. But what I'm looking at is this as well, this swing low right here. So just at the top end of that zone that I just highlighted is that next area of expected resistance. And remember, we don't know what the market's going to do. And we can sit here and we can go, oh, well, it could do this, and then it could go to that level, and then it could come down to this level, and then it could come all the way up to that level. We don't know what it's going to do, but what we can do is find the areas in the market that make the most sense for support and resistance, and then trade around that, right? So we've got our line in the sand here this morning. If the bulls can hold 46.68, more than likely we'll see some type of attempt to push higher. Just keep in mind that we do have these key levels above us that could potentially hold the bulls down. But if they don't, then we're going to have to find some longs for that trek higher. On the opposite side, if they start to sell off, or if the bulls start to push up but then find resistance at one of these levels or somewhere up here, and they start to pull back, we want to consider what we have below us. So below us here we have a few things that kind of stick out to me. First thing that sticks out is this little area right here. So let me just point out that the bounce was essentially off of this 50% area. Getting through that brings us right into this right here on the left. You see all this chop right here? That's what we're looking at below us. And the top end of it is the dotted line I have marked on there right around 46.4275. So a break below 68 could very well potentially open up a push into 42 or 43, which is another 20 points to the downside. So keep in mind, if the overnight low breaks and they get through 50% at 64 there, it's another 20 points lower to the next area of expected support, right? So that would be a good target to the downside. Now, if they continue to just sell this sucker off, they go right through this little area of structure I just talked about, it's back down into this next line at 4,600. And then there's one other thing I want to mention, and that is this little shaded area down here you see from 46, what is the actual number of that swing low there? 46.22, and then maybe a point and a half above it there. That is that swing low there. That's where we saw this really strong push out all the way to the all-time high. So again, a possibility for the market to pull into that area and then find some type of reaction, if not some strong support. Any deeper than that, and then we're pulling back into some of the deeper areas of structure here. And again, breaking that overnight low, for the most general sense, we're going to want to try to find shorts for those lower targets. So hopefully that helps orient you guys this morning. Again, we're holding 50% of the major leg here, somewhat of a bullish clue, but again, if they break that low, it's for lower. Keep in mind these few levels we have above us as potential resistances, maybe as potential targets for you if you find a long. And then again, if you're short, expect to take some profit at some of these levels just in case we do find some support. And then if the market does find some strong support at one of these levels, remember, we don't have to be heroes and buy the low tick. We can wait for the market to come into one of these levels, find some good support, and start to see a trend develop and we break some of the previous highs back here. So let's just look at this scenario. Let's say we start pulling back and we pull all the way down, and it's not in a straight line, but pulls back and comes down right into this level, and then it starts to kind of get this really strong push out, right? And it starts to kind of play around, and next thing you know, bam, it pushes another further, and now we just broke the high of the overnight session. At this point, it's now starting to look like maybe we're going to get that support, and we can look for that long. There's also the possibility the market comes up like that, comes up close to the all-time high, and then it fails, right? There's so many possibilities, and all we're doing is kind of reacting to what the market's doing, managing our risk, which is really all a trader is someone who's basically risk management. That's all we're doing. We don't know what's going to happen next, right? So we're professional risk managers, and we just take it as it comes. Now, some days it's pretty clear what the market's going to do, and that's why we do this analysis. So when we see the stars align, then things are fairly clear. Yesterday, essentially the stars were aligned in both directions, and we were just waiting for, were we going to break the low or were we going to break the high? And then from there, we were basically going in that direction. So yesterday, once that low broke, we were sellers. So this morning, we'll see. If it breaks this, we're sellers until we find some strong support. And I think I've covered everything. So unless there's any questions, we're going to leave it at that. We've got about 6 or 7 minutes here until the open. So we're going to jump over to the member section of the trade room here and start looking at our short time frames, seeing if we can't find some trades. Now, right now on the shorter time frames here, we are in bearish territory. If you look at the tick chart, we broke the 200, broke the VWAP, price started breaking below both of those. And as you can see, really, and this is, I don't have this stuff really planned on the 512, but if you just look at this, how many times does the VWAP or the 200 just continue to act as support and resistance? I mean, look at this 200 throughout the entire downtrend. Now, there are times where it'll pop above and then it actually acts as support, but then it broke below and found resistance. And I'm going on a tangent here, but it's just amazing to me, no matter where I look. Even yesterday, looking at what we were trading in, every time we pulled back to VWAP, we were finding support, and then times we broke below it, we were finding resistance. It's just incredible. So anyone out there who's dealing with tick charts, someone who's a scalper, this, in my opinion, is the holy grail chart. Of course, there's no holy grail. I'm sure you guys are all aware of that, but absolutely love that chart and love these two levels. Incredible dynamic support and resistance. So with that, I'll leave it and we'll get to our member section. So have a great rest of your day, guys, and we'll see you next week for next Thursday's pre-market. Have a good one.